Hello. Now we're going to talk about treasury shares. We are still in chapter 15, intermediate accounting by Kiso. Treasury shares, it means when you repurchase your own shares. Pacific Company issued 100,000 shares of $1 par value ordinary shares at a price of 10 per share. In addition, it has returned earnings of 300,000. So this is your equity section in the balance sheet. It's going to look like this. Share capital ordinary will always be recorded at par. So 100,000 times 1, it's going to be $100,000. Okay? Now, any extras at issuance will go to the share premium ordinary. So again, it's issued at 10, which is greater than the par by $9 per share. So 9 times the 100,000, it's going to be 900,000. It's share premium ordinary. And the returned earnings, it's 300,000. So the total equity, it's 1,300,000. Okay? Until now, there is no treasury shares. Okay? So there is nothing to deduct. Okay? Now, I want to explain something here. Here he said, the par, it's $1. We have 100,000 shares issued and outstanding. What does that mean? Issued يعني we issued them, أصدرناهم. Outstanding, it means it's still in the market. Okay? Now let's see what's gonna happen when we repurchase our own shares. يعني when we have treasury shares. What's gonna happen here? Okay? Okay. Pacific Company issued 100,000 shares of 1 par value ordinary shares at 10 per share. In addition, it has returned earnings of 300,000. So he's just repeating the previous slide. Now, on January 20, 2020, Pacific acquires 10,000 of its shares at 11 per share. Okay. So now he's saying, I repurchased my own shares. He said of its shares. يعني أنا أصدرت 100,000 shares of 1 par at 10. Then I repurchase 10 of them. Okay? يعني I issued 100,000, now I acquired 10,000. Okay? يعني now the outstanding shares still 90. They're still in the market. يعني عندي أسهم still بالmarket. أنا بعت 100,000 بس سحبت 10,000. So I'm gonna deduct 10,000 from the 100,000. So we have 90,000. These are the outstanding shares still in the market. Now, let's see how do we record this. Okay. I purchased my own shares, so cash will go down. It's going to go to the credit side. How much did I pay? I paid $11 per share for 10,000 shares. Okay, so we're going to multiply. It's going to be 110,000. Okay, now what shall I debit? Shall I debit share capital ordinary? No, we debit treasury shares because I repurchased my own shares, so I need to decrease equity. So we're gonna debit treasury shares by the same value, which is the cost. The cost here was $11 per share. Okay, now let's see the equity. Okay, now again, share capital ordinary, 1 par value, it's still 100,000. Share premium still 900,000 because we said we have issued 100,000 shares at 10. So the total will be 1 million. Okay, because 100,000 multiplied by 10 is going to be 1 million. The par, it's 1, so 1 times 100,000 is going to be 100,000, and the rest will go to the share premium. Okay, returned earnings still 300. Now what happened here? We have treasury shares. We're going to deduct treasury shares, decrease equity. Okay, so we acquired 10,000 units at 11 per share. This is the cost. Okay, so 10,000 shares times 11, it's 110. So as you can see now, we're gonna deduct the 110 to get the equity. Let's see here what happened. See, 100,000 shares issued and 90,000 outstanding. See what happened here? In the previous slide, he was saying before he acquired the treasury shares, he said 100,000 shares issued and outstanding. يعني أصدرهم was still in the market. But now he acquired 10,000, سحب 10,000. So what's left? The outstanding, it's 90,000. 100 minus 10,000, it's 90,000. Okay? Now, sale of treasury shares. If I want to resell them, Pacific acquired 10,000 treasury shares at 11 per share. So this was the cost, right? أنا اشتريت my own shares at 11 per share. It now sells 1,000 shares at 15 per share on March 10. So مرة تانية, I'm selling here, so I'm receiving cash. Cash will go up by the selling price. 1,000 times 15, it's gonna be 15,000. Now treasury shares will decrease, okay? But again, when I sell the treasury shares, equity will increase. أسهم اللي بالسوق زادت, so my equity will go up. So treasury shares will go to the credit side. But as you can see here, you always record treasury shares at cost. So كيف قلنا share capital ordinary and share capital preference should always be recorded at par when it's known, okay? Same thing with the treasury shares, it's always recorded at cost. So as you can see here, treasury shares will be recorded at 11, okay? So 1,000 times 11, it's gonna be 11,000. The difference will go to the share premium. Share premium treasury, 4,000. So this is the case when the selling price is higher than the cost. As you can see here, the selling price is 15. The cost, it's 11. So the difference will go to the share premium treasury. Okay? Let's see what's gonna happen when we sell at lower than the cost. Okay? Now here, Pacific sells an additional 1,000 treasury shares on March 21st at 8 per share. So as you can see here, 8, it's lower than the cost. 8, it's lower than 11. So مرة تانية, cash, I'm selling. So cash will go up by the selling price. So 1,000 times 8, it's 8,000. While treasury shares will always be recorded at cost. Okay, now as you can see, treasury shares increase equity when it's sold. لما أرجع أبيعهم معناته I'm increasing my equity, so they will go to the credit side. Okay, at cost. So 1,000 times 11, it's 11,000. As you can see, I have a difference of 3,000. To balance the entry, they should go to the debit side. I'm gonna take the difference. I'm gonna take the difference from the share premium treasury when the selling price is lower than the cost. As you can see here, 8, it's lower than 11. So the difference will be taken from the share premium treasury if I have enough balance. So as you can see in the previous slide, I had a balance of 4,000 when I sold the shares at 15 while the cost was 11. So we have a difference of 4 per share. So we said the difference will go to the share premium treasury. So I have a balance of 4,000. So I can take 3,000. Okay. In the next slide, we're gonna see if the selling price was lower than the cost, but the balance in the share premium treasury, it's not enough. What shall we do? Okay. So in the previous slides, the first time we sold the treasury shares at 15 and it was higher than the cost by 4,000. So we credited share premium treasury by 4,000. Then in the previous slide, we sold the treasury shares at lower than the cost at 8. So we had to take 3,000. We had to take 3,000 from the share premium treasury. Okay, so what's left now? The balance is 1,000. The balance is 1,000. So let's see what's gonna happen now. Assume that Pacific sells an additional 1,000 shares at 8 per share on April 10. So again, the $8, the selling price, it's lower or greater than the cost, which is 11. It's lower. 8, it's lower than 11. So I'm selling here at lower than the cost. Okay, after eliminating the credit balance in share premium treasury, the corporation debits any additional excess of course, over selling price to retained earnings. Okay, now let's see what's gonna happen. I sold 1,000 shares at 8, so cash will increase on the debit side by 8,000. I sold treasury shares. When we sell shares, it means equity will go up in the credit side. Treasury shares, it will always be recorded at cost. So 1,000 times 11, the cost, 11,000. Now the difference between 8 and 11, it's 3,000. Again, we said when I sell treasury shares at lower than the cost, I'm gonna take the difference from the share premium treasury. But I don't have enough balance. I need to take 3,000. I have only 1,000 here. What shall I do? So I'm gonna take the 1,000 from the share premium treasury. I'm gonna debit this one because I'm decreasing this account. The extra 2,000 will be taken from returned earnings. Okay? So again, if I don't have enough balance in the share premium treasury, I'm gonna take it from the returned earnings. Okay? Thank you for watching. If you have any question, please leave a comment. Please like, share, and subscribe.